What's going on, y'all? It's Investor Zimp, aka Zimp Trades, and we back with another trading video. Today is a very special day. It's the day I go ahead and give out my strategy, the Zimp strategy, also known as ZRE. It's a very simple strategy that I pretty much took different parts from other people's strategies that I've met over the years and just combine them into a very simple, easy to follow strategy. I'm gonna let y'all know right now, I don't do the big fancy words or definitions. I'm just gonna teach y'all what y'all need to know and how to implement it into your own trading. So let's get started. Step one is identifying your market structure and your zone. So there's three important structures that a market is always going to be in, regardless of what pair you're looking at. There's always going to be three structures the market is in. You got your uptrend. This is characterized by higher lows and higher highs. This low is higher than that one. This one's higher than that one. This high is higher than that one. This high is higher than that one. Uptrend. Then on the opposite end of the spectrum, you have the opposite, the downtrend. This low is lower than this one. This low is lower than this one. This high is lower than that one. This high is lower than that one. Downtrend. A sideways trend, I also call it consolidation. That's pretty much when a pair is just bouncing between two zones. This black line can represent a zone. There should also be another black line up there, but it wouldn't let me put it. So just to show you guys how this looks on the chart, I've actually drawn up a couple zones on GBP JPY so you guys can see it, right? So this is an example of an uptrend and how you would pretty much characterize it. This is pretty much exactly what we looked at, right? And this is how it translates into the market. So as you can see, these little circles here that I've drawn are your higher lows. This low is higher than this one. This low is higher than this one. This low is higher than this one, and so on. Same with the highs, right? So how do you trade an uptrend? This is the basics of the strategy, right? How are we going to trade? How do we make money from these setups? You guys have probably heard a term in the stock market or any market really to say buy the dip. That's actually not just a meme, it's a real thing. You want to buy the dip. When price comes down and make these lows, you want to buy here, right? You don't want to buy up here. And the reason for that is because there's much less risk. For example, if I were to buy right here, I'm pretty much dealing with no drawdown or no loss, and all of this is profit potential. But if I were to buy up here, even though I would eventually, win the trade if I stay in it long enough, I would still take a loss with all this right here, and I'd be a little bit concerned after being down a couple hundred right there. So that's just an example, but for uptrends, you always want to buy low, okay? Let's go ahead and take a look at the opposite, downtrends. As you guys can see, we got the flip side of it. This low is lower than that low. This low is lower than that low, and so on. Same with the highs. This high is lower than that one, this one's lower than that one, and so on. So with the downtrend, it's actually the opposite. You want to sell at the high points. And again, it's for the same reason. If I were to sell right here, all of this is profit potential where there's like no risk up here. If price were to come up here, I'd know I'd just get out the trade. But if I were to sell down here, you're taking all of this as loss and hoping it eventually comes down when you could just sell at the highs and reduce your risk. So let's just go over that again. For the uptrend, you're going to go ahead and buy at the low points. For the downtrend, you want to go ahead and sell at the high points. All right. Now, this is an example of consolidation, right? And I'm going to zoom in on this because it's a little smaller than the other ones. But yeah, this is an example of consolidation. Now, with consolidation, you can actually trade either way, buy or sell. You know what I mean? Because price is just pretty much bouncing. I call this the bounce house because you got a zone here, you got a zone here. Price is just bouncing. So you can just sell here, buy here, sell here, buy here, and so on. Pretty easy stuff. So that is pretty much just the basics of the strategy. Of course, you're going to need way more info than that, which we're about to get into, but that's the basics of the strategy and how to narrow down the market information to take what you need. Because when you're looking at those candlesticks, it can be a little intimidating if you're a beginner because you have all this market information. So this is how to narrow it down. Find the trend first, find the zones first, and then you can start to see opportunities for a trade. So let's go ahead and get into step number 2 of the strategy. There's only 3 steps, y'all, so you're already halfway there. Step 2, rejection and break and retest. So rejection is a very easy concept to grasp, but it takes some practice on a chart for you to easily be able to see it. So rejection is pretty much any movement price shows you that shows it does not want to go near or inside of a zone, right? And if we go back to this, you can see strong rejection around here. Why? Because you have a bunch of wicks, right? If we go back to the strategy, one of the things, step number 2 right here, number 2 says strongly moves away from zone, wick off, or engulfing. That's an example of rejection. Right here, we have many wick offs, right? You got little wicks. Wicks is a big one right here. Wick, wick. This is showing you that price comes into the zone and then retreats pretty much immediately. It does not want to go into the zone at all. And that's a very, very big thing, because if price doesn't want to go in one direction, it's most likely going to go in the opposite direction, right? So we have an opportunity for a trade at that point. If you have a zone and price is showing rejection, I'm looking to trade it, right? I still need one more confirmation, which is step 3, but rejection is a very, very good thing. It's increasing the likeliness and the strength of the trade. The other form of rejection besides these wicks, what you're going to see is a pause, right? Or it pauses for a moment after a previous movement. And all that pretty much means is right here you have price come up and hit this zone, and then it's selling, right? So we have all this selling momentum, and then when we get right here, you've got 1, 2, 3 hours of barely any movement. The second price near this zone, it just stopped moving for 3 hours. That's another form of rejection. Why? Price was having a lot of momentum, and then it just completely slowed as it neared the zone and then headed in the other direction. So I'm actually going to go ahead and put a circle here because that's another form of rejection, right? So a pause and a bunch of wicks are pretty big examples of rejection. Again, that's just another confirmation to show you what pretty much price is going to do. So if you have a zone and then you have prices rejecting off the zone, you look at them, make a trade in the other direction. Let's talk about number 3, break and retest. This is one of the strongest, I'll say this is one of the strongest things you can learn in Forex trading. Why? Because break and retest zones are some of the fastest moves in the market and one of the most profitable. So let's go ahead and take a look at this right here, right? So immediately right here, right, price goes ahead and crashes right through this zone. It just breaks right through the zone going upwards. So it breaks out of this zone. Now a lot of people would just immediately start buying second price breaks out. But you don't want to be one of those people. Why? Because price still has to retest the zone. You always want to wait for the retest. Price breaks out, it comes right back. Whatever price breaks, it has to come back. Wait for price to come back before making your move. Trust me, you do not want to be one of those guys that are buying up here, and you take all of this loss, you close in loss just to see price go up right where you wanted it to be. It's a very, very annoying feeling. It's very, very bad. But yeah, guys. So break, retest, boom. You see how fast it shoots up? This is why I love break and retest moves, because it happens so quick that you really aren't sitting in a trade for a long time. Whether as opposed to here, you're sitting in for 10, 12 hours here, you're getting 150 pips in about 4 hours. So it's very, very simple. Price breaks, you just wait for it to come back, and then you place a trade when it comes back, showing rejection from the previous zone, right? It breaks the zone, it comes back to the zone, but it doesn't want to go back in the area from before. That's also important. When you're looking at break and retest, you also want to wait to see rejection right here before you get in. I would have got in right here because this wick showing me rejection. I have break and retest. I have the zone. I have rejection. I'm hopping in a trade, right? If I get all of those three confirmations, zone, rejection, and break and retest, I'm hopping in a trade. I don't care if it's moving up, if it's moving down, if it's moving sideways. If I get a zone, rejection off the zone, or a break and retest, I'm hopping in a trade. That's a very high probability trade. Sometimes I do moves where it's just a zone and rejection. Sometimes I do moves where it's just a zone and break and retest. But you always want to have two of these three things, guys, minimum. The more the better, but you always want to have two of these things minimum, right? You want to have either a zone and a rejection, or you want to have a zone and break and retest. The more the merrier, right? The last step, number 3, is simple execution. Once you have your setup, you do not want to fold in the execution part, right? And this is just very simple, basic stuff. Placing the trade, setting your level where you want to get out, and setting your level that if it goes into loss, you want to cut your losses early before you take a big one. So the first step in execution is enter on the momentum candle, right? And we're gonna go back to this example, right? On the break and retest. I'm also gonna do some examples with the downtrend and the uptrend. So you want to enter on a momentum candle. What does that mean? That means instead of just entering willy-nilly, as soon as you see these confirmations, you want to wait a little bit to ensure price is pretty much going in the right direction. This right here is a great example. I'll zoom in even more, right? We're looking right here because we're looking for a buy in this situation. We got the break and retest, we got the rejection. Right after the rejection, there's a huge buy candle. This buy candle is significantly bigger than this smaller sell candle, which shows me that price currently is in buy momentum. So I'm striking right now. You feel me? Now in this situation, I'm gonna simulate the buy with the long position, right? I would have got in exactly right here. Your stop loss is always gonna be below or above the zone that you're trading, whichever direction is in the opposite. You want to put your stop below the zone. Why? Because price already showed you that it doesn't want to come down here. So it shouldn't. If price comes down here, you automatically exit the trade because at that point the setup is invalidated. And then your take profit is always the next key level. So in this case, you could aim for 192, but that wouldn't really be a good risk to reward. So I would aim for 193. I would hold that trade a little longer till we hit 193. And as you guys can see on this setup, it's a 2.85 risk to reward. Anything greater than a 2 is a good trade. Even if it's like a 1.5 or something, as long as you're not risking a big percentage of your account, I would still take the 1.5 if I have all these confirmations. You know what I mean? So let's go ahead and look at this on the downtrend, right? We're gonna come over here. I'm gonna do it for each one. So on the downtrend, right? If you're entering This is not good because this is not a good example because this candle is just way too big. That's all 1 hour. So I'm gonna see if I can get a little clearer one. Let's see. Yeah. So right, this for example, right? Price pretty much comes up. I don't know why this is there, but price pretty much comes up to this zone, right? Your trend line would be your zone because it's the top of the trend, right? And the downtrend, remember I said you want to sell high. So the highest point is the top of the trend, which is where all these bubbles, your lower highs are pretty much adding up. So at the top of the trend, that's when you want to sell. So let's go ahead. We see it get up here. Price is buying. Okay, you got a little bit of buyer momentum. Then the second it reaches up here, you have rejection of the top of the trend because as soon as you get up here, those buy candles turn into sell candles. You got one and then you got a second strong one. So when I say enter on the momentum candle, I would enter on this second strong one because you got one that's bigger than the previous sell candle. So now the sellers are in control. And now that you know the sellers are in control, it's safe to go ahead and enter on this second one. So I'm going to go ahead and simulate this with short position. Put my short position right there. Now, in this case, my stop loss would go right above the previous high. Why? Remember, I said downtrends are characterized by lower lows and lower highs. Right here, we have a lower high. If price were to come back up here, it would create a higher high, invalidating the entire trend. So this really is all your risk should be, because if price comes up here, you get out the trade. Simple as that. And again, you get in the trade at 187.6. You could aim for 187 flat, but again, that's not too good of a risk to reward, so I would probably hold it until 186. And as you guys can see, that's a 3.32 risk to reward. That's an amazing trade. Let's go ahead and head to the uptrend. Show you guys an example of that. So boom. So boom, right? Remember, in uptrend, you want to buy the dips. You want to buy when the price is low at the bottom of the trend. In a downtrend, you want to sell high. Uptrend, you're going ahead and buying low. So we got all these lows, and I already pretty much used this as an example. Yeah, so if we're looking to buy here, right? You see prices going ahead and slowing up. Remember, I said a form of rejection is also a pause, right? At the top of the trend, price started selling, and then as it started to approach this zone, it started, as it started to approach the bottom of the trend, which is an active zone, it started to slow down. 1, 2, 3, 4, 5, 6, 7 hours. We have little to no movement. I'm talking less than 10 pips. And all of these hours, you have little to no movement. That shows me that price is wanting to go up. It's rejecting this trend line. It got to this trend line and really didn't know what it wanted to do. It got to the zone, didn't know what it wanted to do. So it's going in the opposite direction, right? We got the zone, we got the rejection. So I'm going to go ahead and hop in. Let's go ahead and simulate that using a long position right here, right? We got our momentum candle because we have this small sell candle, and then we got two big buy candles that completely overshadow the sell. Buyers have control now. I'm hopping in right here on the second candle. Stop loss goes below again, either the trend line or the previous low, which is right here. So I'm trying to match my stop loss up with this right here. And then take profit, we hopped in at 192, 116. So you can either aim for 193, but then again, that's not too bad. You already have a 2.03 risk to reward, so you can really stop it there. But again, you can also hold to 194 and get a 4.53 risk to reward, which is an amazing trade. You know what I'm saying? Because when you win, you're getting 4 times the amount you made, whether as if you lost, So yeah, so that's pretty much, guys, the strategy. Let's go ahead and do a quick little recap so you guys can get the full, too long don't read breakdown. So step one, identify your market structure. Are you in a buy trend, a consolidation, or a downtrend? Buy trend, uptrend, downtrend, consolidation. Consolidation, downtrend, uptrend, right? Very simple. So once you identify that, you know what you're doing. If you're in an uptrend, you're buying at the lows. If you're in a sideways trend, you're buying and selling at the different zones. If you're in a downtrend, you're selling at the highs. So the next step is to go ahead and find the rejection. Once you know if you're buying, selling, or looking for both, you just want to look for a simple rejection off of the trend or a rejection off of the zone, right? You got many options, If you're buying, you want to look for rejection at the lower of the trend. If you're selling, you want to look for rejection like these wicks, these pauses at the higher of the trend. If you're in a consolidation, you simply just look off a rejection of any of the zones, right? Rejection here, pause here, wick here, rejection, huge sell candle after buy, that's rejection, pause and wicks here, that's rejection, right? Once you found your rejection, or price can also break the zone, you get the retest play and you enter here, that's also another thing you can do. So once you've got your market structure down, you find your rejection, or you see a break and retest, now all you have to do is execute the trade. Enter on the next momentum candle in your direction of the trade, take profit, you set it at the next key level, stop loss, you set below the zone or below the previous low or the trend, right? So that's pretty much the basics of this strategy, guys. There's plenty of things I'm going to be uploading in the future that are going to even add to this, such as Fibonacci, 61.8 levels, um, double tops, different candlesticks patterns. I'm going to be going over all the advanced stuff coming soon. But for my beginners out there, or for you guys that's just looking for a new strategy to try, a high profitability strategy, this is pretty much the best thing I've come up with. This is the best thing for me for the past 2 years. I've been trading the strategy. I've had very, very good results. I took a $1,000 account all the way to 30,000 with this strategy alone, right? So this is my bread and butter, guys. So I hope you guys like it, enjoyed. If you enjoyed it, go ahead and leave a like on the video, subscribe for more trading videos, and please share. Thank you. Zimp out.